Well, the appointment of liquidators at Evergrande will focus attention on the Chinese government. Its response could dictate the future for a range of commodities that are vital to Australia, including iron ore, energy, minerals, including lithium. Vivek Dhar is the Commonwealth Bank's lead mining and energy analyst and joins me now. Vivek, always good to have in the program. I just looked at the response of the markets today to Evergrande. It's pretty muted, you must say, as though the real shock was a couple of years ago. Everybody seems to be focused on what's taking place in the Red Sea right now.
Yeah, look, in terms of how the market has really responded to what's happened with Evergrande, there's just been more of the same, that this has been a problem that's been lingering for a while. And it just underscores that issue with China's property sector, particularly getting that financing to property developers. Like, this is a part of the market that's been hemorrhaging for a while. And in terms of how important it is when we talk about iron ore prices and China's steel demand, we are talking 30 to 35% of China's steel consumption comes from the property sector. So this part of the market, I think there's a tacit acceptance that this is going to decline, but this opens up the door that if this is going to decline and this is going to weigh on China's economy, what will policymakers do in terms of boosting growth? And potentially, will that mean some level of offsetting in terms of increasing China's commodity consumption this year?
It's really interesting because I've been reading some stuff, over the Christmas period about the great shift in economic power from China to India. It's not as though to say China's power is going to diminish, but you can see its population is falling. You can see much of the infrastructure has either been built or, is at the ending stages of being built. And even BHP starts to talk about this as part of its big picture. Is it something you've spent much time thinking about?
Yeah, look, in terms of that importance of China, I just can't stress, like, if you look at, say, base metal demand, we're talking 40 to 60% of global base metal demand comes from China. When it comes to something like India, we're still talking, roughly 5% of global demand of base metals. So it is chalk and cheese when we talk about what is happening in terms of China. And even if it sneezes, it has a massive impact in terms of a demand change. Whereas in India, it's growing, but it needs to record significant consecutive years of almost double-digit growth to even come to the same game as what we talk about in terms of China's significance.
Okay, so then take me to a different part of the world. Take me to the Red Sea and the Houthi rebels and the attacks on these ships and the response from the US. You can see that in terms of oil prices, a spike there. Just explain the balance of energy, because that clearly has an impact on inflation, on the supply of goods to Australia. There's a range of things that are affected by it.
Look, the situation in the Red Sea is for me very, very compelling case that we might see inflation actually pick up. And the reason for it is we're talking 12% of seaborne trade goes through the Suez Canal and the Red Sea. We're talking 30% of container traffic. We're talking 6.5 to 7% of global supply of oil and fuel, 8% of LNG trade. We are talking, it is a significant conduit of trade. And what is happening right now is because of those Houthi attacks, you're basically having to reprice all these goods that are being transported through this corridor significantly higher. So one option is to pay the insurance premium for going through the Suez Canal and Red Sea, and that has jumped 10 times in the last few weeks. Your other option is to go around Africa and pay the additional 2 weeks of travel journey. So however you slice and dice this is going to increase the realized cost of any goods. And so far, it's not the oil price that's impacted because physical oil supply is safe. But ultimately, the end consumer price of fuels is going to go up as this transport cost increase shifts through the supply chain. So that is something that is certainly on our radar and something that is quite concerning because it has certainly lifted freight rates across the world.
And do you see any quick end to that? Is there any solution or is it something that's drawn out?
Look, this started as a 72-hour warning that be careful of Houthi attacks. And it has now become more indefinite. So the shipping market, at least, is looking at this in terms of the next few months. So this is something which has changed very much at the beginning of this year, right? But I would say that the market you got to watch for, and it actually comes back to oil, is what is going to happen with US-Iran tensions. We saw the first troops die following the Israel-Hamas war in terms of a Iran-backed militant group. And this is something that could see US and Iran engage more directly. And if Iranian oil supply gets impacted and then we have follow-up escalations by Iran, that's where we could see oil prices really spike. And in my view, that's really what's happened this week is oil
Yes.
prices have lifted. And that's really on the back of this US-Iran tension rising.
Vivek Dhar, always good to chat to you, and many thanks for your time today.
Thank you.